All right, folks, so let me hop over just to give kind of a state of where we are at right now. So I think this is important. So first of all, from an MTM perspective, we have almost a linear up condition in the CT, all right? So this is net buying across the board for what we call the quality index. This is the ARCX, which is comprised of the NASDAQ, the New York Stock Exchange, and the American Stock Exchange, which has got your options and ETFs and things on it, as well as, stocks. So when we see the ARCX in this kind of condition, that's very bullish, and we want everyone to pay attention to that. Another thing to take a look at, across the top here, I've got tick, and then I've got effectively the SPX showing here, and we're playing right around this 6,000 level, and that's why I came on right now. What I want everyone to be aware of is, first of all, the red line right here is VWAP, and why that's important is VWAP is often a reference point to buy against, right? And so we tend to see behaviors around VWAP, not always, but we tend to see behaviors around VWAP. And the thing that I want everyone to be aware of is that we're playing them up around the +2 standard deviation. That's what this yellow line up here is. And we're up over 6,000. Now, the fact that we went above and came back below means to me, you guys can argue this all you want, and I'm happy to listen, but I don't think we've got the necessary adjustments that we were anticipating. What were we anticipating? So I just refreshed this a few minutes ago, and although we're above the 6,000 strike, and it's got a tremendous amount in the SPXP, right? So this is all of them turned on. I mean, we've got a tremendous amount of net long deltas that are sitting there. That's that 40,000 in COI sitting there for the entire complex, right? So now when we take a look at just the 0 DTE, again, we have the 0 DTE COI level there, and we have that 11,895 net long contracts to the upside. So now this has now started to move into a regime where we would expect to see a dealer response. So when we go back to this, okay, now we're starting to see some real behaviors, right? So think of these levels as a sponge, a wet sponge. And what happens is that we get into these levels, and we don't know how the market is specifically hedged. The Citadels, the Susquehannas, etc. Those folks who make the markets in these areas maybe already have a hedged for this, and they don't need to react around these major levels, or they don't, right? But the longer we spend above a key level, and we know it's a key level just based upon what we're seeing here, right? We know this has got a huge amount of net long delta contracts that are sitting at it, and now they are 51 delta, 52 delta while we're above them, right? So they're at the money, and we're starting to push up. Over time, all the stuff below it, it's always useful to look at what's below it, and below it is positive long deltas, right? These are ostensibly, these are call dominated deltas, and they too, when you look at the gamma distribution, this is all your second order Greeks are going to kind of fit in this realm right here, and that means we've got charm supporting us on these net long contracts. That charm is pushing us upward, and it's gonna, the longer we stay up at this area, at the 6,001, 6,002, just the natural progression is our book's going to get longer, the dealer's book is going to get shorter just due to charm, and as a result they're going to need to hedge, and that will push upward. There comes a time today when we don't know when it is, and we don't know what the reaction is going to be, but if we're dealing with 6,001, 6,002, and we don't see a major push to 6,003, 6,004, 5, like some really strong bars upward, then we're kind of just sitting on our hands. But when we start seeing that sponge that soft area start to break away, and if we can hit the 4 and the 5, 6005, 6006, and we see some decisive action in that area, that can be very, very useful. So that's what I'm looking for right now, and that's what we want to see. So the point of this discussion, you know, now you have achieved a situation where we already were looking. I mean, we just talked about this in the other discussion, where the 6,000 strike was going to be under pressure. We saw the ROCs pushing up. We saw the Linfit lines pushing up. We saw the speculation occurring. Now we've pushed above it. Now charm is going to start taking effect, and intraday action is going to take effect. We could take profits from here, right? That would pull us back down. We're looking for that. Or we can use the tools to see, is speculation continuing? So let's go do that. I'm going to go on down to the automated channels, and I'm going to pull up first of all, let's pull up VAL-D. This prints every 5 minutes. It's down there. If you're a gold or you're a legendary member, you have access to this. And so here's what that chart looks like. All right. So the first thing that pops up at my eye here is that this is a bell curve distribution. This is a speculation format. When we see nice, tight bell curve shapes, you know, well-defined tails, everything, magnitude over here is much, much higher than what we're seeing down here. We know we have upside speculation. If this is new to you and you're not used to looking at this, you should get used to looking at this. This is a great tool to understand what our participants doing. So the market tends to transact where there's a realistic outcome of moving towards, right? And so we see the aggregation of contracts in that area. That's why we have this centroid. That's why we look at it in this context of where are the market participants focusing their attention. Now, on the put side down here, we have this wide, flatter, more rectangular type shape. And what that means is it's more ad hoc. And what that tends to give me confidence, especially with price moving up, and we'll look here at some other charts, that this is closing. A lot of these negative deltas are closing, and we're starting to see that call speculation really, really manifest itself. And you can double click on the legend and you can see that right now the market is looking at 60-30. Well, that's not actually too far out of what we were talking about this morning. And in the previous talk that we just did, let me go to the game plan, and let me call up the game plan again. In the previous talk that we just did, we said that 30 strike that's up here, right here, is a likely area for us to get to. So that 3209, 3477 is the top of the gradient off of 6,000. We could continue to push up if market participants are giving us that, that sense of momentum, of are really, really working that part of the structure. So you can see where the distribution is. You can see the volume is pretty significant on the call side. So now let's go down to Vol-M. This is how you bring these tools together to kind of get a really good picture of what's happening here. So let me grab that latest. So when we take a look at volume, or Vol-M, excuse me, we've had a little bit of a change than what we had before, right? So let me call that up here, all right? We had a positive slope, right? We had a positive slope in the earlier. I've closed them, so I don't have them, but I did record it before, and we do have a video to show. But one of the things that we observe in the SPX as a cash-settled index is that we tend not to cross the centroid lines, right? And the reason is that, remember, this is the center of transacting. This 59.95 is where largely market participants were the center of their transactions at the 10:50 slice, right? 10 hour, almost an hour and 20 minutes into the market session. That is now, that would be at the money as we crossed here. This is a very interesting violation in that something happened, and we can go look at Vol-D again for the 1050. In fact, let's do that while we're here, and so we don't get too far away. Here's the 1050 slice, and we can see that there was some definite transactions that were occurring here that pulled us, most likely pulled us downward, right? So we probably had some profit taking that was going on up underneath that that 6,000 strike, which more or less pulled this down into this particular area. I'll take another look at that in some detail here in a bit, but in general, we tend not to see this. So with the Linfit line now starting to come down and the projections now no longer positive, this is pointing to that 6,000. Again, this can all change, right? Sentiment can change. It's going to be hard to make significant progress to the upside. So right now, the center of the market in that last transaction is 60.15, 60.14. You can see it right here. I'm hovering over it, right? We saw in the vol D command, let me see that right here. Let me go back to the latest one right there. We saw that 60.30 was really the upper boundary of the speculation, and then it falls off very, very quickly. Price tends not to move where there's no transactions, right? So as a result, we know the likelihood of transactions is driving us into a level up under the 60.30 level. Now, what does that mean in this context, what we're seeing here? I think it's even less. We tend not to see this violation. I would be surprised if we got aggressive and started pushing above, but it's starting to slow. Obviously, this is now negative, and you can see right here, even though these are positive, and this has given us a positive view, the overall, we're not getting as aggressive to the upside as we were, say, a half hour ago when I was talking. Now, on the put side, these put holders are probably getting really nervous, right? And I say that because of the wide distribution that we're seeing here. And they're most likely, with price trending up, they're most likely closing and capturing whatever extrinsic value they are able to recover. I do not think these are opening to the downside. I don't think necessarily that we're seeing a lot of transactions that are occurring deep out or far out of the money down here for puts because price isn't reflecting it, right? We're not moving down. We're not seeing that opportunistic movement. And, oh, by the way, when we take a look at Vol D, and again, we just turn everything on here. Oops. Let me do that. Reset the axis. Come on. See if I get everything to turn on here. There we go. Because of this flat, almost rectangular nature versus the bell curved shape nature, this is not speculative yet. So I would be looking, if we saw a sentiment change to the downside, I would be looking to see this level start to become more bell curved immediately underneath, much like what you see right here. And then I would start to see these participants that are out here start to close their calls. And we know there's a lot of calls out there because we can see them right here under the call OI column, right? This is the 0DT call OI column here. All right, so what's the takeaway? We've got some ROC action, which is starting to pull us down. So we've got, in the big picture of things, we yanked down here. That's probably why this went slightly negative, right? So let's go grab that chart. Let me grab that one right here. All right. We yanked down, and now we're starting to come back up, but we're still negative slope. If this goes positive again, we could start moving upward, but we're not getting aggressive market action to the upside. You can also see up here that we're really converging. The rate of change of these bars from one slice to the next slice is approaching zero. There's not a lot of speculation going on, and we're coming right up into the euro close. The euro close most likely will have a real definitive outcome of what's going to happen here. Remember, Monday's a holiday. It's also the inauguration. So once we're released from the hedging that the euro market is having to do, we then can start progressing into, what is the afternoon session going to look like, knowing, of course, that lunchtime here is generally a weak volume area. So here's what the plan is, at least from what I'm looking at. I'm waiting to, decisively take. I'd like to see us get up into that 6,005, 6,010 area and then pull back. A pullback that holds 6,000 could be bought. There is a risk that we're not going to move much up into that area. And when we look at above the 6,000 strike, you can see now we've got 1,400, 1163, which is a weak dip area right at the 60-10 in the net OI, but we've got a lot of charm here that's sitting down below us, right? Again, it's all within this gamma distribution. All the calls that are down here, because there's no second order functions down here, all these calls are already at delta 1. Simultaneously, all these puts, if they're not short, all these puts are at a delta of -1, right? You can see that here. So the area that we're contending with is this area on the puts and this area on the calls. Decisively, the calls are winning, winning the battle. Also, look in the overhead. It's a very strong decay in our overhead. You can see all this if we go down to NetStat, and I'll wrap up here. If we go down to NetStat, here's what it looks like. We remain with a very, very strong level below us in the money call dominated. We had this earlier today. Remember, we had this in the money call set up. I said, everybody pay attention. We've talked about this at length this morning. It's incredibly important. These are just going to continue to grow, and now we've moved the levels up from the previous level. So now you can see we're starting to get into what I call parity, where we get more or less a balance in charm, and you can see the imbalance underneath us. That's how we get this push upward in the overall markets. Also note, we've got very, very strong gamma to the downside. We've also got strong gamma to the upside. So if we can get enough action to move higher, then we are going to push higher through gamma action. Change in spot price is required in order to realize gamma. If spot price isn't moving, gamma goes to a constant. It's literally within the complex. It stabilizes. If there's no change in price, there's no change in gamma. That means there's no change in delta. It's a constant value. Charm takes over. And right now, charm is pretty darn solid. It's getting very, very close to being parity. If charm takes over because of this also, remember, this is decaying. This is increasing. If we get continued structural charm, we could push higher, and I would think that could be in the money, and we'll watch Vol M to see what's going to happen there. We could see those adjustments. The other nice thing that I like to see is volatility, and if we are going to continue to see a drop, let me just go here, turn on the previous close. You can see last is the blue. We are clearly dropping in volatility across the term structure, right? We're below the previous close. That will contribute as those the left side is closed, right? Those are puts as well as profit taking, whatever the case. And as we add new calls to the right hand side here, we set up a condition for a Vanna rally also. And you can see right now more long deltas are going in on our side of the book due to what's above us, especially as they do the volume introduction of opening out of the money calls. And that is going to make our book longer, the dealer book shorter, and all things considered, we're going to push upward. So,
I'm sorry. Last time you missed the entry, and I just want to make sure you're paying attention to price. It seems to be holding 05 and pushing up.
Oh, thank you very much. Oh, yeah, look at that. Oh, whoo. All right, so I'm going to hop off here. I'm going to get on to some trades, but yep. I think this is our dealer adjustment. We're pushing 3 standard deviations on the upside. Look for it to pull back. I think there will be an opportunity to pull back. We know that the 10 area. Get your orders ready to go long. If we hold the 05 and the 6,000 level, I think you can go long and probably ride this thing up. All right, I'm going to stop there, and we'll see what happens here. This is very exciting. I love it when a plan plays out. Thanks. Appreciate the heads up, by the way.